guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. And this is going to be your mortgage rate update. Currently, we're sitting at 5/5/2022, and I'm telling you, my projections, they're looking like they're correct. Everything that I've said so far looks like it's exactly projected to where it's going to go, but we're gonna go ahead and price out 5 different mortgaging products. It's gonna be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And my projections we're going to be teetering over the 6% mark. Hopefully we don't get into the 7s, but as a 30-year fix, we are sitting currently, as of today, as a 5/5 Cinco de Mayo. Well, happy Cinco de Mayo. I don't know the relevance or the significance of Cinco de Mayo. I honestly, I just know you drink a lot of tequila, pop a Corona. But 30-year fix, we're going to be sitting at 5.62%. That is 0.12% increase from 1 day ago, 0.22% increase from 1 week ago, 0.60% increase from 1 month ago, and 2.51% increase from 1 year ago. This is actually going to be our 52-week high. 15-year fix will be sitting at 4.9%. That is 0.02% increase from 1 day ago, 0.07% increase from 1 week ago, 0.66% increase from 1 month ago, and 2.37% increase from 1 year ago. This is also going to be our 52-week high. 30-year FHA will be sitting at 5.19%. That is 0.07% increase from 1 day ago, 0.29% increase from 1 week ago, 0.57% increase from 1 month ago, 2.57% increase from 1 year ago. That's also going to be our high for 52 weeks. 30-year jumbo will be sitting at 4.75%. That is 0.04% increase from 1 day ago, 0.20% increase from 1 week ago, 0.45% increase from 1 month ago, 1.60% increase from 1 year ago. That's also going to be our 52-week high. 5/1 adjustable rate mortgage is going to be sitting at 4.69%. That is 0.04% increase from 1 day ago, 0.41% increase from 1 week ago, 0.69% increase from 1 month ago, and 2.31% increase from 1 year ago. And that is also going to be our 52-week high. It's actually the highest rates we've had in over a decade. I think it's actually 13 or 14 years. Now, for the first time, Mortgage Bankers Association released this post out that this is going to be the first time in that mortgage delinquencies have decreased. Now, as everybody knows, mortgage forbearance, the deferments, we've had a couple of years where you didn't have to go ahead and populate, what the delinquencies were because of the mortgage forbearance and deferment. But in this article, we actually took that into consideration because majority of people weren't paying their mortgages because they had the option to go into forbearance or deferment. Now, forbearance was a horrible idea by all means. Forbearance just means that, let's say, for instance, you didn't pay your mortgage for 3 months or 4 months or whatever. You compile each and every single one of those months, and then all of a sudden you're going to have to go ahead and pay the piper. You're going to have to go ahead and pay it all back. But as things are getting, loan mods are happening, silent seconds are being introduced, banks are trying to adjust everything according to how much you ended up owing versus how much you actually owe right now. They're trying to fix everything out, but because of all of these mods, because of all of this, the delinquencies have decreased, but we're waiting for it to go ahead and catch up as of right now. Now, as everybody knows, back in 2008 when the crash happened, if we teetered over the 8% delinquency mark, that's when everything kind of crumbled. Now, the adjustable rates were also a big factor. But as far as everything else goes, back in 2008, the delinquency rate was at, we went a little bit over 5%. That's when everything kind of went into, panic mode where these mortgage-backed securities, because what happens is whenever you go ahead and purchase a mortgage, whenever you get a mortgage and then you use it to purchase your house, that mortgage will go ahead and get bought and sold as a bond, which is a debt. That'll get sold into the secondary market, which is the stock market. Then once it gets sold, that's going to go ahead and give a risk factor of how much leverage you could possibly have when you're buying and selling these mortgage-backed securities, like anything. So like, let's say mortgages on this one was this debt was at 3.5%. We're projecting that you could go ahead and make some money off of this debt, off of this. They'll go ahead and trade it out. So if you ever had a mortgage, you'll all notice that sometimes you'll go ahead and have another servicer, then another servicer. So like, let's say for instance you got your mortgage with Bank of America or Wells Fargo or JP Morgan Chase or whoever it might be, right? I'm just naming off big banks. These companies will go ahead and sell off your mortgage to somebody else that is going to go ahead and service it because they think that they're going to go ahead and make money off of it. Now, back in 2008, we teetered over into the 5% mark. That's a percentage of delinquencies on that. Mortgage delinquencies actually as a whole, they actually rose the first time in 9 months. Now, even though the Mortgage Bankers Association said that this is the first time that we had no delinquencies, well, they're not looking at the biggest picture of the whole entire thing. The bigger picture is that, yes, delinquencies are on the rise. The delinquencies are really a big factor right now. Now, mortgage delinquencies are on the rise. Indeed, in February, the national delinquency rate rose for the first time in 9 months, largely driven by 97,000 rise in early stage delinquencies, or those that were in the 30 to 60 day past due. According to new data based on the month-end mortgage performance statistics from Black Knight, a mortgage and real estate data analytics company, the number of properties that are 30 days or more past due or in foreclosure reached approximately 1.95 million nationwide. Now, the 1.95 million nationwide, that's still a far stretch from us going into like this, what everybody's talking about. Are we in a housing bubble? Is everything, thing? No, we need to get to about 8 million. 8 million total households in delinquencies. Past the 60 days is when things start going a little bit on the sour end, and then we have to go ahead and worry a little bit. While total U.S. foreclosures start to hit 25,000, it's actually up 541% from the same time last year, Black Knight revealed. Now, the reason why it's up so much is because a lot of these homes that were in the past year, 2 years, there was a eviction moratorium on rental, there was forbearances, deferments. All of these were kind of propping everything up on a way that we didn't really see too much. But why we are seeing this uptick, mortgage delinquencies nearly disappeared during the pandemic because of the generous mortgage relief provisions enacted by the federal government in the spring of 2020. Now, everybody knows, of course, obviously, it's going to not have a delinquency. You're not going to have a delinquency whenever there's... Now, obviously, delinquency was going to be at an all-time low because nobody had to pay their mortgage, nobody had to do that. Now, everything is kind of on a catch-up, right? Everybody is just trying to catch everything up, trying to get the numbers all dialed in. Now the delinquency rate for mortgage loans from 1 to 4 units, residential properties decreased to a seasonal adjusted rate of 4.11%. So 4.11% of all homes right now are in delinquency. Now, for the sake of this argument, the Mortgage Bankers Association, they asked for all servicers to go ahead and report forbearance and delinquencies on their payments as long as as long as everything on the original mortgage terms is not fulfilled. But do all of them do it? I don't know. Nobody ever does. Or banks, the mortgage financial people. Not going to do any of that. So for the purpose of the survey, MBA asked servicers to report loans in forbearance or delinquency if the payment was not made based on the original terms of the mortgage. Now, the original mortgage when you do a silent second, it still falls under the category of it actually being on the original loan terms. Don't ask me why that makes sense. Don't ask me how that actually works, because I still don't know. But the way that it works right now, because I made a few phone calls to understand this exactly, it's not that case. The delinquency rate decreased 54 basis points from the fourth quarter of 2021 and was down 227 basis points from 1 year ago. So are they reporting some of it? Some services are. Big services are, because we have to get somewhat of an accurate number. But are all servicers doing it? Absolutely not. No, they're not doing it. The mortgage delinquency rate dropped for the 17th consecutive quarter, reaching its lowest level since the fourth quarter of 2019. So in 2019, everything was great. Everything was hunky-dory. Nobody really had a problem. The job market was really well. Everybody was doing good. So that was at the best time. Now then we went into deferment, we went into delinquency, we went into all of that. Now let's just say, for the sake of argument, if 50% of the servicers on these banks and the people that are holding these mortgage-backed securities are not reporting deferment or delinquency, it would automatically just put us into that whole entire, pre-2019 era. But we're still at 4.11% delinquency rate. The number that we all have to go ahead and take a look at, if that ticks over the 6% mark, which is not that far away, then we're in some deep shit. then we're in a little bit of a problem. Well, that's your mortgage rate update. That's what that's where we're at, and for up to 50% commission rebate, 0% listing fee on selling your current home or any mortgage assistance. Link in the description below. And if you like the intro music, I put a new song every single one of my videos, so you can go ahead and enjoy the end of it. If you like, dislike, all that stuff, like, subscribe, comment, or dislike, or tell me I'm an idiot, whatever it is you want to do, just do something, put something down below. And till next video, guys, I really appreciate you watching, and have a happy and safe Cinco de Mayo. Don't drink and drive. Uber, Lyft, get a friend, I don't know what it is, yellow taxi, if they're in still service, you do that thing. Until next video, guys, peace.